So another US bank has just collapsed. And I'm giving you this warning today because I want you to protect your money. Make sure your money is there in the next week. Make sure it's there in the next month. And for sure, within the next year. Because now we're getting experts telling us that things are going to get much worse between the next 6 to 12 months. So I'm going to break down what's going on, which bank just collapsed. Just a heads up, it's a regional bank. The majority of you probably have no money in this bank, but the concern is that this is the first bank to fall in 2024. So I'm going to break this down because this is likely going to spread. Now, all I ask is one thing, it takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now let's begin. So what is the bank that just collapsed? Well, we're going to talk about this. We're going to go over this article right here from AP News. It says regulators close Philadelphia-based Republic First Bank. First U.S. bank failure this year. That is the key. It's the first U.S. bank failure this year. Even in a strong economy, banks normally fail at a rate about 1 to 5 per year. Okay, this is the first one. But experts are predicting that as soon as we see this banking crisis unravel, banks are going to start dropping, and this is going to be potentially 1 bank per month. That means 12 banks, not branches, total banks are going to close in 2024. Now, I'm going to read a little bit from this article, but then I want to explain why this is such a big issue. But again, keep in mind, we've been hearing reports of banks in other countries here in the United States as well. They're refusing to give us our money. And experts are predicting that this is a sign of what's to come. Banks don't want to give us our money because they don't have the money. They are wanting to hold on to as much cash as possible. Just look at this.
I don't understand. What are you talking about?
You probably remember this from last week.
Or if you're going to get cash, I will need an invoice for the car purchase.
Why? No, I'd like to. It's for the car's payments for in cash. I can't use a bank draft.
This teller doesn't want to give him his money.
Like a private?
Yeah, it's private. It's literally from my friend.
From your friend?
Yeah, but he wants it in cash.
Can he give you like anything that you're purchasing from him?
She doesn't want to give cash.
No, I don't. You don't need that. Bro, what is it? I'm only asking for 3.
She doesn't want to give cash. She's trying to ask him for like an invoice or of something of what he's purchasing. This is from the Royal Bank in Canada. Just to give you an idea, this is not just happening in Canada, it's happening all over the United States. Let's get back to this article. Okay, look at this. It says regulators have closed Republic First Bank, a regional lender operating in Pennsylvania, New Jersey, and New York. Again, the majority of you do not have a single dollar in this bank, but this is why it's such a big deal. It says the Federal Deposit Insurance Corp, this is FDIC, said Friday it had seized the Philadelphia-based bank, which did business as Republic Bank and had roughly $6 billion in assets and $4 billion in deposits as of January 31st. Fulton Bank, which is based in Lancaster, Pennsylvania, agreed to assume substantially all of the failed bank's deposits and buy essentially all of its assets, the agency said. Republic Bank's 32 branches will reopen as branches of Fulton Bank as early as Saturday, which is today. It says the bank's failure is expected to cost the Deposit Insurance Fund, this is FDIC, $667 million. Okay, $667 million. That's pretty substantial. Okay, now I want to get into a few things. Okay, and first let me read this, but then I'm gonna get into a few things. It says in a strong economy, an average of only 4 to 5 banks close each year. So I was a little bit wrong. I said 1 to 5. It's 4 to 5. But this is the big deal right here. It says rising interest rates and falling commercial real estate values, especially for office buildings, grappling with surging vacancy rates following the pandemic, have heightened the financial risk for many regional and community banks. Outstanding loans backed by properties that have lost value make them a challenge to refinance. Now, I want to address this, okay? This is the biggest issue, and here's the reason why, okay? U.S. banks have seen the largest amount of outflows since September of 2001. September of 2001. I don't think I need to remind you or remind everybody what happened in September of 2001, specifically September 11th. Okay? You know what happened. That is unprecedented that we saw that, and now we're seeing the largest amount of outflows since then. That's troubling. But let me read this to you. Just so you know how bad things have gotten, okay? Most banks are reeling from the effects of the commercial mortgage industry. They're reeling because of the higher interest rates, because of just those things in general. But banks at the end of 2023 were holding more than $400 billion in unrealized losses. $400 billion. This is not something that the U.S. government's going to just come back from. $400 billion in unrealized losses. That's a massive amount of money. But listening to executives and especially in the banking industry, here's the reason they are troubled. Because the Fed promised they were going to cut rates multiple times this calendar year in 2024. However, the Fed has not done that. The Federal Reserve will likely not do that. There's reports that the Fed will potentially come out in November, December, and cut rates. But if they cut rates, inflation is going to go up. Instead, what the Fed should do is raise rates to push inflation down. But if they raise rates, there will be a banking collapse. The housing market's going to struggle, right? Millions of people are going to simply panic. They'll be out of work. Businesses are not going to be hiring. It's going to be just a big mess, a disaster. But it's not just the commercial mortgage industry that's going to hurt. That's going to come in 2025. So that's coming next year when billions of dollars of mortgages have to be refinanced. Okay? But here's the reason why things are going to get worse soon. It's because of the auto industry. Here's what they're saying. There are already loans that are bad. They're the automotive loans. Okay? Car loans. If you purchased a car, let's say in 2022 or sometime in 2023, the concern here is, especially in 2023, your car loan, let's say you paid $40,000 for a Tesla. The problem now is you've been paying that on the $40,000 loan and it's been coming down slowly. The concern now is that $40,000 car that you purchased last year is probably now only worth maybe $27,000 to $30,000, but yet you still owe $34,000, $35,000 on it. That's a concern. You're in over your head. You're underwater. And millions of people, as of right now, are already behind on payments, some of which are not going to make a payment again, are just waiting for the bank to hopefully come and take their car because, again, it's just a burden to them. Here's the crazy part. Banks don't want these cars. Banks want you to try and make a payment, even if it's less. They just need money. They do not want a liability, which is a car. That's not an asset. It's a liability. Because, again, it's not producing money. It's sitting there in a lot waiting for somebody to purchase it. Again, banks are going to collapse one after the next. It may be your bank. It may be my bank. It may be a large bank, a small bank, a regional bank, a credit union. We don't know. But what we do know is the warning signs have been written on the wall for the past year. We are going to see a banking crisis. Lately, all we've been seeing is the Federal Reserve, the Treasury coming in, trying to save some of these banks. But honestly, based off everything I've been hearing, based off what experts are saying, what executives are saying, what economists believe, there's no saving many of these banks. These banks are going to go under, and maybe, just maybe, another bigger bank takes them on, purchases them, some of which for pennies on the dollar. But they're going to purchase them, they're going to take on their assets, take on their liabilities, and hopefully they can weather that storm. But again, we have no clue if it's going to work. All we know right now is banks are poised to collapse. That is why you and I need to protect our money. So, here's what I recommend. Well, it's not just me either. This is what many financial experts recommend as well, is to put your money in different banks. If you have $1 million in 5 different banks, maybe spread it out a little bit more. you should be fine with 5 different banks, but maybe spread out a little bit more. Because again, FDIC insurance only covers up to $250,000 in deposits. But according to Secretary Janet Yellen, all deposits will be insured. Here's the thing. The federal government can't do that. They don't have enough money. The federal government is broke if they do that. So again, keep your money safe, spread it around, put it in different accounts. Don't just put it in a checking account. Don't just put it in a savings account. Move it around, okay? Really diversify. Maybe you put some in gold. Maybe you put some in silver and cryptocurrencies and the stock market and real estate and other businesses and a checking and a savings account. Again, diversify so that you are not pretty much held captive because your bank decides to go under. So that's what we have for today. Again, as soon as I know more, I promise I'll come back on and share all the latest news and updates. But that is what we know as of today. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.